Dear all, thank you for watching Phillip Market Watch. I'm Magdalene, the gaming analyst, and today I will share with you some updates in this sector. Well, first I'll start with Genting Singapore's latest addition to the property. We were extremely honoured to be invited for a tour to the Marine Life Park on 5th of December. Well, when we talk about Marine Life Park, it's actually made up of two segments. The first one is the aquarium. The second one is the Adventure Cove. Tickets are priced at $29 for each of the attraction. Now, when we went there, the place was fairly crowded with a very good mix of locals and tourists, and it was a weekday. Okay, we visited one of the 11 ocean suites with an aquarium view, and if you want to stay in these rooms, it costs you $2,000 to $3,000 a night. So this is the photo of the room. It is a beautiful addition to the property, no doubt, but we do not expect meaningful earnings contribution from Marine Life Park for Genting's fourth quarter results because the property only began operations in December. Now, the positive effect will be more apparent in first quarter of 2013, but even then, the annual revenue expected is probably a third to at best half of Universal Studios, and Universal Studios is bringing in about $300 million a year. So the profit margin for Marine Life Park is also expected to be lower compared to the rest of the property because Marine Life Park, we are rearing live animals. So maintenance costs for live animals versus, say, your roller coasters is obviously, higher. So we think the park will generate an additional $25 to $30 million a year. And, if you divide it by 12.2 billion shares, it is unfortunately not a very significant value on a per share basis. Now, what the property will do, and which will be obvious, when we look at earnings, is to halt the slide in margins, which have been trending down in 2012. So right now, I think at this juncture, we maintain our neutral rating for the firm until we have a greater and more major catalyst. Well, the second piece of news pertains to the crackdown on junket operators in Macau. Now, Macau is a dot on the map, just like Singapore. But look at the gaming revenue; it is spectacular. It's many times larger than Las Vegas, or many times larger than Singapore. Macau's gaming growth had been about 40% per annum, but it had slowed significantly in 2012 to single low digits in certain months. Now, Macau's growth had been fueled by China's strong economic growth, the rising affluence, and of course, the junkets. So the news that people from at least 3 of the Macau's biggest junket operators have been detained spells trouble. The top 3 junkets account for 36% of the market share, and we know that junkets run the VIP rooms. They bankroll the VIP clients, and are also known to help the clients to move large sums of money around. So the clampdown on junkets, may result in a significant decline in funding sources, which may in turn affect the gaming revenue. So we advise caution on investing in casino stocks with exposure to Macau until, again, we get greater clarity on this issue. Well, thank you for watching. Please tune in again next week. And should you have a greater interest in the gaming sector, please feel free to contact me. Thank you.